Okay, let's jump into it. Quarter past 10, 23rd of May. So look, have a look a little bit at the data that sort of came out overnight. Was it anything sort of major happening yesterday? A lot of these sort of PMIs and that, pretty uneventful and like not really sort of anything showing a whole heap of confidence in that. Of course, this is all sort of well, this initial lot here is through Europe. This is one with the benchmark being 50, of course, and above 50 expansion, below 50 some sort of level of contraction. Um, Obviously, further away from those numbers are what we're sort of seeing a bit stronger contraction, stronger expansion. Just having a look at this here, that's actually quite quite weak. So 45 for the manufacturing out of the UK and that, but seems to be pretty much on par from like the kind of areas. It's not like they were sort of going from 51 or 52 plus 50s kind of thing coming back there. But across the board, looking pretty sort of weak in that, and which actually sort of brings me to the main sort of point of it all because these move the market a little bit, and certainly like we got a little bit of reaction through Euro session, but nothing sort of major with it all. But come to the US and here you've got actual sort of strong US data, and this is a thing that I'm really taking note of at the moment because obviously US dollar has been bashed and hammered so hard for so long. It's been trying to get up off the floor for a little bit. There's like very low confidence in basically the economy over there. Over the last couple of months, we've seen some things that have been really sort of drastic, like equity markets and US dollar both selling off at the same time. The bond markets have been absolutely demolished and that. And this seems to be a big sort of theme, not so much just restricted just to the US in terms of the bond markets and the yields going crazy. It's almost like a bit of a lack of confidence across the board with a lot of these sort of major sort of currencies and that because the like I don't cover the yields and all this kind of stuff on it too often and that, but the long end sort of yields seem to be sort of spiking quite high, which is obviously showing sort of like a little bit less confidence in these sort of economies, basically to be able to sort of service those debts and pay it back. Um, it's not just to the US over there, but specifically what we're looking at, well, with this one here and DXY, is that everything else has been so negative, and now they're starting to get some little snippets of some positive data, which I believe is the kind of thing that not necessarily it's going to be the big turnaround story for US dollar, but particularly when you look at what's happening in the other majors, and Japan's not excluded from this stuff either. You know, it's actually not looking too bad over there. And you got to think you've got an asset that's sort of been the US dollar being the asset that's sort of been bashed down for the last couple of months. All these other things trading near their highs, US dollar trading near its lows. Now, if you compare, like these aren't the only things that are going to drive it, but PMIs are a good indicator about how these things are doing on more of a sort of local level. And if they're not looking so rosy over in Europe and that, yet they're looking not too bad, sort of locally in the US, well, maybe that could provide some option and could provide part of the sort of secret sauce to sort of get this thing to rally a little bit. And we saw that sort of as these bits of data came out. Look, it was already sort of slightly moving up, but it got it to sort of pop up and hit that little short-term target, albeit very short-term target, sort of 50 points or something, I think I called for yesterday. And market got it there. Market rejected from there as well. But that's okay because and I mean, I'll get to the chart in a moment. But when you can see the markets respecting the levels on the chart, you've got something you can work off. So yeah, we'll get to that in 2 seconds. So that was pretty much it overnight. We had existing home sales, bit of a snoozer of a thing. Look pretty much flat from what they were. They expected a little bit of a tip up, but obviously didn't get that. Unemployment claims. This thing is just like this is like initial claims as well. So I assume sort of like people sort of first applying for the unemployment, but it's just like the same every week, which is quite odd. But it's been like this for a while, and that I think I said a couple the other week, and I said, look, until this says thing pops out to around sort of 350, 400 or so, it's a kind of bit of a non-event. And obviously it comes out weekly, so it's not some big sort of shocker with it all. But in terms of data, that was about it. We had a couple of sort of people speaking in that sort of through the night. Nothing really sort of spectacular. Through today, Asia's looking pretty quiet. We've got retail sales from the UK, slight tick down over there. We've got CAD retail sales looking bit of a mixed bag here as well. So there's quite drastic sort of differences there actually, because you're looking quite a slowdown in core, but obviously pick up on the headline month over month. So interesting to unpack that a little bit. And apart from that, a couple of speakers and no late night end of week bits of data to sort of work off. So that's good. It means that hopefully we can sort of see the markets kind of respect the charts a little bit. So speaking of which, we've got DXY to start off here. And if we look at this thing on a short-term sort of basis and that, this is the little downtrend channel that I was sort of calling out yesterday. And to me, it was this like sort of fact that like it was holding and it's kind of holding where it needed to on a higher sort of structural level. Just a recap of it all, we saw the buyers have been progressing. This is where you wanted to see them hold, this 100 level. Obviously, it didn't quite get through there. Sorry, didn't quite hold there. We saw a couple of taps down into it and eventually, bang, popped down and sort of came through. So it's only sort of right that you'd probably expect that where we'd seen selling before, we'd seen it as a support, we'd see them try to hold it as support. Well, it's only right that, you know what, sellers would come in here. Because there was a couple of people that, you know, like myself was included as well. I'm like, yep, I think US dollars going up high, going high. That's fine. Doesn't mean it's out of the game, the fact that it's come down here. It just means it's a warning shot. Consider it like a shot across the bow, because what we've seen here on a smaller scale is building up, and it fails. Bang, and it moves up and moves up. So yes, you can go one time frame higher each time and say, hold on, wait, it's not too bad, not too bad. And this is what we're kind of looking at, and if we really sort of drag it right up, is potentially this kind of move here, where we're seeing it sort of just come back, retest. Maybe it looks a bit better on the weekly here. Let's put you. So do off both these ones, you and you, all intervals. And you can see that you've got this channel coming down here. You got your breakout, you got your retest. Retest obviously lower than your breakout level, which is fine. This is structurally how a channel break will happen. And you could just sort of see this as a bit of a pullback here. And, you know, it's holding where it needs to hold. That's the thing. If this thing sort of has seen some sort of positive push here, RSI is not looking like it's about to sort of rocket up over the top over here. I'll give it that. But should we see a flip? Should we see this thing rally up from here? Well, that actually locks in. Just don't have this thing on a. That actually locks in a higher low. And you start to potentially look at some sort of channel that could come out like this. Different color, yellow. This could be something that we'll be working off. And this is predicated on the idea that this level here holds. And this is what I was saying yesterday, that sort of like 98.8, this sort of support through here, I think is what needs to hold coming into the end of the week. If you don't hold this level here, so if we sort of close down, you know, low 98s, I think that's a failed rally attempt. You're back inside this, it puts you back inside this channel, and that's where you're looking down, you know, structurally probably, you know, down to around these sort of 95, 96 areas as market sort of would sort of drift down, come down over here. But as it is at the moment, buyers have stepped in where they need to step in. Structurally, you're retesting the outside of this channel. You're putting in a higher low. This is a very crucial point, because this is what I always sort of say with the three legs. You got your move up, you got your resistance, you move back, you found support. If this is support, this is the leg we want to see. And you want to see if this is going to come through and put in a little sort of medium term higher high to see this thing to move up a little bit more here. Because a lot of people are calling for DXY to come down here, and that's generally the time that the you know, what I call the USD sort of fanboys and that little wrecking ball of stuff sort of starts to sort of show up, and people start to go, oh, hold on, wait, you know what? Maybe the economic data isn't so bad. So as I said, this area here is definitely a warning shot. it's kind of broken this sort of structure of moving up, moving up, moving up. That's fine. You know, rip out a couple of people. It held the next level where it needs to hold, as we can see through this zone here. This is where the buyers pretty much were sitting. You can actually see on the dailies a little bit better, and you can move it up so the wicks are in equal with it all. But more or less, that's the zone. They held where they need to hold. Now you need to see this continue up a little bit. So the fact of just how these candles are set up here a little bit, I wouldn't be surprised with a little bit of a sort of push down, make a little bit of a bottom wick, and then push up and then flip. So if we go through, let's put a little alert here. So it's taking out the daily high. So if we can sort of push down, make a little bottom wick, push back up, and then take out that, this alert here is just going to give us an idea. Okay, keep an eye on it because it's moving up into an area. That's what you want to see. You want to see a little bottom wick here. You want to see it turn bullish, and you want to see it come up still above 100. Well, 100.2 is kind of where we want to see it above. 100.6 was a little bit better. Puts it back up over here, but step by step. That's the kind of thing that we're sort of looking for at the moment. But I would say early move here. We'll probably put in a little bottom wick. Look for this thing to flip and then pop up at the top or side over here. We're seeing a lot of things come into major zones at the same time. Called gold yesterday, 32.80. I think we were trading at 33.40 or something at the time. I'll get to gold next. That pulled right back into that zone, and I'll get to gold because that's very much shoring up a level. And this is what I like to look for. This is what I call cross chart confluence, where you see these sort of corresponding markets, and you can see it's sort of like they're both hitting pivotal points at the same time. Generally, we're going to see these things break at the same time. It's not just, okay, I trade this chart and that's it. I'll trade multiple charts, and when I can see these things all hit their respective supports and resistance at the same time, then you know that something's building, because once one of those supports or resistance breaks, most likely we're going to see that move across the market, and that's because we're tracking the flow. We're tracking we're basically where the capital is. You know what I mean? Like if we see options pop up in gold and not in US dollar, well, you'll see the flows of capital go from one market to the next. And obviously not every market's a one-to-one, but that's the whole sort of point. You got to pick your markets, and that's why I only trade X amount of markets. But anyway, point is, we'll see a little bit of a push down here. If we can see this thing sort of turn around and pop back up, come through these highs over here, and then obviously sort of take out 102, then I think we might be onto something. We had that first little back test here of the channel. This is a good indication of sort of like how these things break, back test, and then took out and moved up to a high. Now you want this to sort of really, as I said, sort of continue back up over here. Down underneath 99.3, well, this is probably a sort of a fail of it all. You probably come back down, maybe test this and maybe see some buyers back down over here. But, I mean, you probably want to see something a little bit sooner rather than later. If it's too deep back over here, you're probably just looking like this thing's just going to range through here without really too many catalysts, to finish the week off. You might just sort of things snooze into the end of the week. And I've been noticing that across the board with a lot of charts at the moment. A lot of things are just really just ranging. It's funny. I was saying this to my partner yesterday, sort of talking. I'm calling now. No, I'll speak to you later. I was talking to them and sort of say, market's dead at the moment. She's asking, she's like, oh, why is that? And, there's no one sort of direct answer of this kind of that. But my feeling with this at the moment is that, you know, sorry about that. Yeah. So my feeling with this at the moment is more that, it's the market's just waiting for direction. I think that sort of obviously it's ranging, going back and forth. That's a great super insight. But the point is that it's basically sort of I think the next move is going to be the trend move. And I think we're sort of going to see a move that's going to probably sort of continue for, maybe through the summer. So I think that's why the market's so cautious at the moment, because either we're going to see US dollar break down, it's going to be coming down to these big levels over here, or we're going to see a breakout and it's going to be moving to the top side over here. I think you're going to see the same with, like, say, silver, with Aussie, these kind of things. I think the next move is going to be quite substantial. It's going to hold for a bit. So while the market is poised and sort of trying to position itself, it doesn't want to be sort of full in. It waits for the break, and then we see the trend happen. We've seen this with Aussie. Aussie's been in like a sort of a tight range for the last, what, 5, 6 weeks or something like this. Once that breaks, that move is most likely going to not sort of just go 50 points and then sort of fizzle out. So we're going to see these things move most likely through the next couple of months. So we just sort of got to wait it out. I think a lot of people get chopped up in this time as well. I think a lot of people sort of like get frustrated. They sort of, they've looked at the textbook and everything online and said, this is how you trade. You buy this, you move your stop, you do this or do that, and they're just getting hammered. And look, it takes a toll, even if you're just getting stopped out for evens and small losses. It just shakes you and it just frustrates you. And I believe with my little tinfoil hat on that this is partly the point of a lot of these things. Yeah, I mean, albeit at the moment we're waiting to see how bad the actual situation is over in the US. I do believe these periods of sort of things just chopping and grinding up and down in ranges, it's almost developed. We see this a lot with gold, that it what I call it sort of clearing the book, and it burns people out mentally because they just it's tough to take losses, even if they're small losses, and it burns people out financially because how many losses can you take if you're not producing? And it's because people buy these things, and I'm going to buy it here, I'm going to sell it up here, and I'm going to trail my stops, and all this kind of sort of great, beautiful sort of fairy tale stuff. But you know what I mean? It's not trading. Well, that is trading, but you're going to get ripped up in that in the meantime. So that's why pretty much through a lot of losses and a lot of expensive lessons, I just go in and out. That's what I do with my sort of trading in that, and it means through these periods you can definitely still bank. Like I've been trading the US 500, like the yes, not massive, but I took 5 positions there. I think I banked 120 points across the 5 positions. you know, it's not too bad, particularly while things are sort of very choppy up and down. I've been short on the short side as well, but mind you. Anyway, whatever. What we're sort of looking at now is DXY. See how this thing goes. I think down at the bottom here, we've got a little bit of a sort of support range through here. Look, if we sort of get down, I would expect sort of 99.68, 99.7, whatever, down this zone over here, if we could put in a little bottom wick and then look to see if we can get some pushback up and drive through there. But I think the fact that it did respect the chart, I mean, it came in, sellers came in exactly where we expected them to be. It's pushed back down. That's fine. Let them filter out. If we can tap back into this sooner rather than later, I would say we kind of got a good chance to push up and go through. As I said, if we do come back down to this 99.4, I don't think it's necessarily okay, bang, the whole game's over. But I do think that'll sort of just basically put it to sleep, and we'll just sort of see a little bit of a ranging through this lower end over here. So you'd like to see a bounce or a hold sooner rather than later. Move on with gold, and this is what we were saying yesterday, that we had that sort of like wedge kind of forming. We obviously saw that little breakout early. Very interesting where it sort of came in tipped to this green line here, all through all this massive of junk and that, is actually the sort of top end of a big channel that we kind of sort of been sort of working with for quite a while. As you can see, sort of coming up through here, there was like a breakaway channel, and market sort of came in and sort of tipped it on there. So 3280 was the level that we wanted to get down underneath. As you can see, moved down, tested a number of times, actually 3 times or so, 1, 2, 3, 4 kind of times down the bottom over here, and buyers are holding us. So for this, it just means for myself and that this is kind of a locked in level. It's obviously a level that sort of, we called yesterday, this is where we wanted to see it under. Came down here, tested, and it's bounced back up. So if you want to sort of see downside, that's the kind of thing that I'm kind of looking for. A break and close underneath 3280, and I think we're probably going to see a deeper sort of pullback here. I mean, you've got a chance of a retest. Never had a retest of this 3260 level, but I would say most likely around this 44 level, which is really where we had that breakout, that 4450 level the other day. Like, I kind of stuffed around, but this is where we saw the explosion. There wasn't really a great deal of reaction around this level. this 32.60. We'd obviously seen a little bit of support, a little bit of resistance. It played its part a little bit back through here as well as the bottom end of that range that we had coming down off all-time highs when we went to 3,500. But I'd say, yeah, underneath sort of 32.80, I think you'll see a shift in the kind of sort of mentality of a little bit more of the sell the rips kind of thing. But as you can see, US dollar pushing down early, gold pushing up a little bit. So you can tell that they're kind of working in sync a little bit at the moment. Top end of this, 33.16. You can see obviously the bounce found sellers here. If you can go above this, then there's no reason that you can't come back up and test these highs. Where we at? I am sort of looking more for a downside move here, but you got to respect the fact that the buyers have stepped in, and obviously they're trying to push it a little bit here as well. 11 o'clock is generally when we see a little bit of more sort of volume come in for Asia. So, this thing's not out yet. Certainly, this little opening sort of move here, you got the RSI. This is on the 1 hour, certainly there to support a move up. Yeah, I think this is an area that I'm looking at, 33.16. Above 33.16, you could open up to retest that 40 level. But again, look, I'm going to be looking more for a downside move and a break underneath 32.80. So we'll see how we go with this one, and particularly if we do see US dollar sort of pick up a little bit of a bid. Aussie, another one that sort of, looks like it's about to go, and then bang, smack down. Big rejection over here, actually. What is it, 6 o'clock? What's that data we have out at 6 o'clock yesterday? That was the Euro PMIs. So nothing that really, and obviously it's Euro, so it's nothing direct with Aussie, but you can see the reaction that they sort of had to it all. Pushed up a little bit and then got absolutely slammed and then sort of grinded back down. So Aussie, as I sort of called yesterday, this has really just found itself a super tight range. I mean, we've had this big sort of area and, a little bit of a swing high, a little bit of a swing low. Now it's really starting to tighten up, and these are still the levels that I'm looking for. I do think that the top side has a couple of issues. As I said, I still think US dollar is going to run, so that's why I'm just sort of more looking for the downside of it all. Typically in the past, this is the kind of thing I'd be like, all right, cool, yep, boom, round it back here. I'd take some nice positions, and Aussie would just fall, fail down here, even lower. So underneath, 63.90, a close under here. It's breaking range to downside. That's what I'm looking for. But as you can see, it's found itself a little bit of support around this sort of 64.08 area. A couple of hours, this is again, it's on the 1 hour, and it's sort of found support a number of times and that sort of through here. So, if there's no sort of real sort of out there catalyst, as I said, like news-wise or anything for, to sort of like push this thing one way or another. But as I said, I think that sort of if we can see a little bit of a push down with DXY, well, that sort of gives the idea that we see a little bit of a push up in Aussie. But if we again look at, even though Aussie's not part of DXY, it's that broad sort of barometer approach towards what the market's doing with the US dollar. And if they flip the US dollar, DXY, and they push up to the top side, Aussie's not going to be immune to that. Aussie's not running on anything other than US dollar weakness, in my opinion, at the moment. It's, equity markets are at all-time highs. Aussie's at, multi-year lows. Actually, it's a little bit up off multi-year lows, but realistically, it's down, it's, low 60s in that. I mean, with the US dollar being so weak at the moment and equity markets being right at the highs, gold being realistically pretty close to its highs, Aussie should be at 68, 69 cents or so. But it's not. You know what I mean? And you got to ask yourself why. Why is that? It's because it's sort of like the risk is just not there, and it's not responding. People aren't sort of confident in the currency, and if they sort of start to sort of push US dollar, and you're already lacking a little bit of confidence in the currency, well, you're going to go down even further. And as I said, look, we're still. I've got to actually look at what their actual stance is because I've heard sort of 4 cuts, 5 cuts, 3 cuts, this kind of stuff. Well, maybe not 5. We've already had the 1 cut now, but whether we've got sort of 2 more cuts for the year or 3 more cuts. But either way, RBA's still in their little sort of dovish cut cycle. So this is pushing down here. If we have a look at, just having a quick squeeze. No, China one still sideways, just grinding. It's attempting to break back into that zone, but it's just not doing anything. It's completely sideways at the moment. US dollar as is at the moment, like in the very short term immediate, is obviously, as I covered a second ago, pushing down. But should this thing break out, that's going to push it there. And this is why mainly I'm not going to be looking to be trading Aussie. Because the biggest driver on this is obviously what the market does with the US dollar. One factors into that, it's not doing anything, and then the RBA is pushing it down. So for me, that's still giving me a very sort of rough cut analysis move for a downside move in Aussie. Despite what the chart and other sort of people in the market sort of happen to say. But again, you need the confirmation of these things. And underneath 63.90, be looking for these other levels that we've seen the market react at. We got big reactions from the levels we called out, very big reactions actually. I think this thing bounced, 150 points off that, 200%. So, should we come down here? I don't think 63.20 is going to go quietly. But should this break, this is going to be the major zone for me. 63.20, I think you break there. I think you're coming down, sub 62. And I wouldn't mind buying Aussie down here, 61% move of this bounce. If I get an option to buy it down here, I've got a bit more of a plan of a medium term hold. Closer to 60, the better I can do. If I could get it at 60, well, that'd be great. Maybe I'll sort of cut the positions in half, put in half here, put in half here, but look for a potential sort of medium-term hold. By that, I mean end of European summer. So we'll see how we go with this one. But as I said, I'd like to buy it down here. I just want to see these levels break first. And I think if we can get down underneath that 63, I think that could open it up to these lower levels. That's the broader view. Short term, look, obviously it's just sitting sideways with it all. RSI is looking like it might want to sort of push a little bit. Look, above 64.30 on with the range. Yeah, pretty much covered that. I mean, when these things are ranging, there's not a great deal of sort of analysis you can put towards it all. But look, that's my sort of broad overview and outlook for Aussie. Silver came up, tested for a second, and then smacked down. So it's interesting where it bounced actually. Sort of this falling resistance that we had sort of coming through here, pretty much to the cent. Market decided to bounce back up from there. So again, look, silver's just an absolute snooze fest in terms of what's happening. Look, I mean, if you caught this long from down here, well, you've done pretty well. But again, this is where the sellers were expected to be, and that's where it came in. This is what I was saying yesterday. If it broke and closed up here, then I believe this would have been the range that you would have been trading with. But it got up here for half a second, and then the sellers were like, that's great, bang, and they slammed it back down. So, back into this range, this could be seen, look, in all fairness, this is kind of like a bigger range. This isn't like a no man's land. There's a reason, an explanation for how this got sold down. This is where the sellers were previously. This is where they were. So I wouldn't necessarily call this a failed breakout. But certainly if you come back down to the bottom over here, this could be seen as a failed breakout attempt to sort of come back up and then sort of moving out here. But for me, I think this is more just try to move up, bang back into the range, more chop coming through here. I think, as I said, these things I think are very much just waiting for the next move. And if we see US dollar break to the top side, these are going to move to the bottom side. This is my outlook on it. This is how I'm going to trade it. This is what I'm looking for. I don't think that we're about to see all new highs. I think we're going to see a little bit of a recalibration. And I think too many people are I think that sort of US dollar short trade is overcrowded. I think too many people are calling 90s. And with that, I think they're going to rip those people apart first and then take it to 90. And that's the thing. That's how the trading works. Like, you know what I mean? There are people behind there, and their job is basically to take the money of the other traders. I think people sort of forget that sometimes, that there are other people on the other side of these trades and that. And it's like, oh, but it should be going here. Well, it should be going there. It will go there. It'll just blow you apart mentally first, and your account apart, then it'll go there. So anyway, we'll see how we go. But as I said, look, for me, it's still a little bit of a search. Look, should you come back up here, then this is still the play. I think if you can close up around those 30s, high 30s, 33, sorry, this is the kind of play I think it puts you up into a top range over here. But I think the fact that it got smacked and it got smacked so hard from up there means that obviously, people are going to be cautious. Do you want to buy it here, knowing that there's a whole heap of sort of volume and people ready to sell it here? So that's your trade, this little move up like this. Probably not. I think you'd probably come down here, reload, give yourself a good buffer, then run at it. But we'll see how we go with it all. For me, again, it's still just a little bit of a snoozer. Copper tried to break out and then absolutely slammed. It was like 1,500 points or something. I think it dropped. This is a big smack down here. Look at that. 1,700 points in, what's this? This is a 1 hour chart, so it's, 6 hours or something like this, but that thing got absolutely hammered. And really, again, it's just tight little range. Tested out the top, failed. Tested out the bottom, buyers, bang, moving back up. And this is what I'm saying, that I think a lot of markets are just doing this at the moment because, they're cautious. Because, nobody really knows what's going to happen next. Anybody that tells you they do is just bullshitting. You just got to sort of put your analysis together and back your call and cut it, hopefully, if you're wrong. But the thing is, I think sort of like, across the charts that I'm seeing at the moment, I think there's a good chance that we see these things sort of pull back. And as I said, I'd like to buy Aussie lower. I'd like to buy copper lower. Gold and that I'm sort of on the short side of. So I think these things have probably got a little bit of a sort of cooling to come. And not that it's really adding much to anything. We got China, and this is just back into mega grind. Put it on the 4 hour so you can actually probably see it a little bit more. Look, trying to go up, failed down. Top side of this, support over here. This is just like a tight range. So it's almost like this now. It's a range again, and this is the thing. It's a range inside a range. Breakout box. Very similar to what we see with copper, very similar to what we see with silver, very similar to what we see with Aussie. You know what I mean? These things are just sitting there and they're waiting to sort of show, are we going to see a break higher on the US dollar? And if we are, I don't want to be like, this is the market collectively speaking, they don't want to be on the wrong side of that. So what do? You wait till the break happens and then you trade that break. So we'll see what happens, and this is why I think once these things do break, we're going to see a trend start to form. But a lot of people will wait for that trend, then jump on, because it's a lot better to be on a trend, miss the start, miss 3 or 4 days or whatever, and then be on it for 2 months, than it is to get that extra 4 days and that extra couple of points by sort of being in early, because that puts you at risk. So the low risk is wait for the break and then trade the trend. So we'll see how this all plays out. Okay, that's it from me.